different industries, how to enhance the efficiency in the traditional industry. That is an important issue, and her view resonates with the two speakers previously. They all set great stores by the facts in the practice in developing nations, how to help them to decarbonize the traditional activities in traditional energies. That's our focusing point. And lastly, she talked about international cooperation should have new coordination and new standards. All the nations and institutions should help us to compromise with each other. For example, the central bank of all nations can disclose more information, so the process would be more transparent, and we know where you are, where we were, and we can better coordinate the whole process. These are very important insights, and we may talk about them more. And later, next, we will have Rusnak, Dr. Rusnak, the Secretary General of the European Energy Charter. The floor is open to you.
Thank you very much. It's indeed a big honor and privilege for me to be today with you. Can you hear me? Is connection fine?
Yes, no problem. We can hear you.
Great.
No
Thank
problem.
you. It's great to reconnect with my friends in China and elsewhere. First of all, I would like just to make a short notice in the introduction that I'm not anymore the Secretary General of the International Energy Charter. I'm speaking now as a private person, but nevertheless, it's a big honor and privilege to be today with you. And indeed, I would like to focus on few aspects which have been discussed today. Congratulates to our Chinese friends in general and the people from Hainan in particular. So I visited your province when I was serving as a Secretary General a couple of years ago in the past times of pre-COVID. So I was really impressed by the dynamism and the development in Hainan. So I wish you all the best, and I'm not surprised that you are one of those forecomers with discussing the green financing as a unique merger of the environmental field and the financial innovation which could be seen in Hainan. It makes your land so fertile to this type of discussions. So I'm very happy to be with you today. I'm speaking with you from Slovakia, from Europe, and I wish you a very good afternoon. I very much appreciate that was decision to move the start of the session to the later afternoon to allow us from this part of the world to connect you in more convenient time. When I saw first the proposal that we should start in early morning in Chinese time, it was too difficult for me to participate now, but now it's much more better. Thank you very much. So having said that, I would like to start to say a few words about the green finance in general. Indeed, I think I would completely agree with previous speakers, and in particular with Dr. Tar, that we are at the beginning of this new asset class. This is a completely new area, and there are some elements of it already making, but we are still, this is like a learning curve. We all globally, regardless where we are located, in Europe, in China, in Americas, in Asia. So we are all learning. So we are in the learning curve, and we are at the beginning of this learning curve. Having said that, it doesn't mean that we didn't learn anything. We have done so. And I would like to draw your attention to two interesting events which show how the green financing is different and variable. Maybe you noticed, maybe not. There was last year was a very remarkable event, which is coming from a developing nation in Central America, in Belize, which succeeded to make a restructuring of its own bonds, sovereign bonds, through the blue bonds to protect the maritime, to transform their failed sovereign bonds into this. They were able to subscribe enough bondholders to support this plan. So I think this is very remarkable element, a very remarkable success of green financing on its early stage. So we should be very imaginative, because this is
You have some problem of connection. You are muted. You are muted. Please, you are muted.
some connections issues. So apart of Belize, I would like to draw your attention to the second interesting from the other end of this very broad area of green financing was a successful issuing of the European Union green bonds. So this is a completely different story. Of course, EU is one of the most successful regional groupings of countries, of states in the world, and they have been able to manage to issue the green bonds last year. And moreover, what is important, what is happening in all, is that the European Commission and member states are working on a process of making this learning curve of green financing more steeper and faster. What is needed for this? It's clearly that green financing is encompassing everything. It's a public and private financing. It's financial institutions. So what we need kind of a benchmarks and rules for this. And without pretending to be the only and unique rule setter, Europeans, we have an ambition to support the green finance and to go through agreement on what exactly will qualify as a green financing. For this, what we have to start to work in 2020 to start the work on taxonomy. And actually the taxonomy of green and transiting technologies is very important, because it allows members of the public and industries and of course individual and institutional investors to understand whether this or that investment is really truly sustainable or green one. So therefore, we believe that a taxonomy is a very important issue. Having said that, it doesn't mean that it is simple and easy to make a taxonomy, because we know that the countries are making the energy transition from very different baseline. So for a country which has a heavy industry and is relying on a coal, it's a very different starting line from the country which relies on the nuclear power, or for the country which has zero or almost no industry and is electricity rate of something like 30–40%, like in some places in sub-Saharan or Sahel Africa. So nevertheless, what we need a clear rules. We need to understand what actually qualifies for the green financing. So the taxonomy discussion in Europe is going on. It's not over yet. The European Commission recently presented a proposal which is heavily criticized for both sides. From us, which for those countries or those activists would like to have it more cleaner and more cleaner and faster, because the Commission actually included conditionally some investment in natural gas for the transition, and some investment in nuclear could also be qualified for a certain period of time as a green investment. So this is on one hand criticized by those proponents of the slower energy transition that is too little. And for those proponents who are seeking the fast energy transition, they say that this is unacceptable, that the nuclear and gas investment will be still labeled as environmental friendly. So this discussion is going on. We don't have yet a final decision on this, but I believe personally that this will be done in a shortest delay, because there is a already ongoing discussion for more than 1.5 years about the taxonomy, and I believe that within the first half of this year, so we will have a clarity on this. taxonomy is important for setting the European green bond standards. And the standardization of this newly emerging asset class is important, because once we agree on the standards, and I believe personally that those different standards will be set in different parts of the world, but finally they would follow a convergent trajectory. So we know that currently we are not going on the best times for the multilateralism, and we have seen that there are the frictions here and there. There are the geopolitical different views in different parts of the world. But I personally believe that the green financing is so important. So the stakes are so high that later in the day we'll be able to agree on a common understanding what actually is the green financing. And those European green bond standards are reflecting, in my opinion, this understanding. They are supposed to be inclusive. They would cover all kinds of issues, of issuers, so private, institutional, governmental, sub-governmental institutions. They will be also voluntary. So this is very important. So there is not ambition to be a rule setter for all the world. So those European green bond standards should be voluntarily accepted by the country, but it will be kind of like a act of quality. They would be aligned with the taxonomy as soon as the discussion is completed, and they should be linked to the projects linked for support of energy transition. Probably the most important thing of all of this idea of having the European green bond standard reviewed by the external reviewers registered by the European Securities and Market Authority, because I don't believe that it would be correct if the governmental officials would label those any bonds as environmentally friendly or meeting the European green bond standards. It should be given to the market. It should be given to the external forces, which should be credible enough to make this independent judgment whether actually this bond or that bond met the European green bond standards. And last but not least, very important thing is that this proposal of the European bond standards do recognize the grandfathering. That means that if a bond was accepted as a green bond, and if in the later stage the rules are being tightened, so they will still maintain its eco label, its green bond label, because the bonds are issued for a longer period of time. It's impossible to redo it as we go. So this is very important for stability and for predictability for investors and bond issuers. I think the European green bond standards and the European green bonds regulations will be very important in making this learning curve of green financing steeper, not only for Europe and its neighborhood, but European market is so deep, so important that it would also influence other countries which are not politically necessarily aligned with the European Union, but which follow the same logic of simplifying and making the rules available for all players in the world. And as I told earlier, I believe that there will be some set of rules emerging in different parts of the world, but eventually those set of rules will be converging to one globally acceptable standard. And I believe here the process of the COP, of the UNFCCC, and to the importance which has been given to this topic in Glasgow in the 26th meeting of the Conference of the Parties would continue, and we will see in the years to come more focus on the green financing and more focus on setting the generally acceptable universal rules for green financing in the future. Thank you for the exchanges in this very interesting webinar. I learned a lot, and I'm ready to continue the interaction with you. Thank you very much.
谢谢 Rustat 先生的那个讲演。 我在他的讲话中间呢，记住了2点非常有意思的观点。一个呢，他就是说现在在整个的这个
presentation.
Yes. Can I share?
You have.
I already share. Can you see? Shall I off?
我还想刚才强调一下刚才那个。
I need to finish my summarization by our previous speaker. Just 1 minute, please.
Yeah. Yes.
OK， 就是刚才那个这个。
Just now.
Can I?
You start.
Yeah.
I just made my comments about Dr. Rustak's talk. Dr. Rustak just talked about 2 very, very critical questions. One is about the conflicts between geopolitical considerations from the developed countries and the moral obligation, moral duties of the developed countries with regard to developing countries. So how to reconcile these contradictions is very, very important. The second critical idea is about the use of natural gas. Natural gas should be considered as a clean energy, or natural gas is still part of the fossil fuel energy. So to some extent, fossil fuels will anyway lead to carbon emissions. So you cannot reduce the carbon emissions by putting green energy into the category of clean energy. So that's a very, very important criteria, because in some Asian countries, such as in Japan and or in China, we are trying to transform natural gas into hydrogen, and then to use hydrogen as a clean energy. But those kind of hydrogen is qualified as green hydrogen. It's not, they make a difference between green hydrogen and gray hydrogen, while the process of transforming natural gas into hydrogen is still qualified as a gray hydrogen. So it's not encouraged by green finance. So we just have to debate on this issue at the international level. Should be the use of natural gas be also take into consideration as a transition technology, very useful to limit the carbon emission. So very, very. Currently, I invite the next speaker, Yuri Shirai, to make your speech. So yes. The floor is yours.
Thank you very much. Let me. Can you see it? Oh, okay. So.
Yes. Okay. Yes, please.
I like
please
to.
Go on.
Yes, I like.
Go ahead.
Can you hear me? Okay. So I like to express gratitude to the Hainan Green Finance Institute and Mark Uzan in Paris for kindly inviting me to this great conference. I'm always very much interested in China's economy and green policies. So what I will do today, I like to talk about global trend on ESG investment and green central banking. So since COP26, about 162 countries out of 196 countries globally now committed to net zero goals. So while many countries are committed to the net zero, I think we still need to come up with a credible policies to reach this target. Now, according to the International Energy Agency, they estimated, so between 2016 to the 2020 in the past, the actual annual investment in this green area annually was just about $0.9 trillion. Now, in order to achieve this net zero target, between 2021 to 2025, over 5 years, we need annual 2.6 trillion US dollars for this global investment. And between 2026 to 2030, we need 3.8 trillion annually. And at this moment, the total global investment amount is well below this amount needed. So we need to really accelerate the government policy, also to mobilize more money into this green area. Now, this is a stock data. This is the estimate provided by World Economic Forum. And globally, the total loans and bonds, just the general, is about 124 trillion outstanding, out of which the sustainable loans and sustainable bonds are just about 3.4 trillion. And that is only about less than 3% of the global loans and bonds. So we really have to transfer this other finance and fossil fuel, which is even bigger than the sustainable loans and bonds. And we have to increase this sustainable part and reduce fossil fuel part, and then transfer more money from other areas into the sustainable financing amount. Now, this is the data compiled by GSIA. This is based on survey compiled by major asset managers and owners in developed countries. And according to this survey, right now, the sustainable asset under management, sort of outstanding amount, amounts to the 40 trillion US dollars globally. And this is quite dominated in US and Europe. But more or less, we see a growing trend in this sustainable segment. Now, when we think about how to achieve net zero targets, we first of all have to have a very good government policy. On the left-hand side, the credible policy, and also we need money. So we need a combination of government climate policy together with the private sector money. Now, globally, we started to see growing ESG investors, and they are mostly come from pension funds and insurance companies, and largely in Europe, the United States, and Japan. And they try to influence the regular banks and other financial institutions and intensively, and also through banks and then financial institutions, they try to influence companies, but also as a stock owners, the ESG investor also directly influence companies through engagement and voting rights practices. Now, I just want to mention, out of these ESG investors, there's a growing alliance. It's called GFAN. It stands for Glasgow Financial Alliance for Net Zero. So we say GFAN. And this comprises of the various asset managers, bankers, asset owners, insurance, and the financial services provider and consultants globally, including advanced economy and developing countries, and they all committed to achieve net zero, especially with regards to their investment portfolio by 2050. And then, which I just mentioned, global this sustainable asset under management is 40 trillion. But this alliance is including emerging economy. So this net zero asset managers, the number is about 65 trillion US dollars. And at COP26, Mr. Carney mentioned this global alliance now consists of 450 financial institutions. Haven't really achieved net zero, but by 2050, they are going to convert those money into green area. So this is a very powerful and now growing influence to the other financial institutions and also corporate sector. Now I'd like to switch the topics to the central banks. As a former Bank of Japan policy members, I closely follow the central bank's green strategy globally. Now, when we talk about central bank, we have to remind that central bank is not a leading financial institution to work on the green finance. Basically, first government has to come up with a credible climate policy to achieve net zero target, and the central bank is going to support the government policy. So central bank's mandate is to achieve price stability, such as 2% inflation target in advanced economy, and under this price stability mandate, the central bank will be there to support government policy. Another thing why we have to pay attention to the central bank is that the central bank also monitor and regulate the banking sector. So they closely watch the financial stability risk, and since this financial stability risk is increasingly associated with climate change, and therefore central bank also have to look at the climate issue from the perspective of financial stability. Now, what central bank can do to cope with climate change? The most important and rapidly developing practices is the top one, which is the try to achieve financial stability with regards to climate change. So what central bank does is that they try to improve disclosure on banking sectors, especially in line with TCFD guidelines. That is a global common guideline, and basically to disclose the banks, to ask banks to disclose information about the impact of climate change on their balance sheet up to 2050. And also central bank asks banking sector to conduct stress test, climate stress test. So that is, I think, more than 30 central banks are already doing some kind of stress test and disclosure, disclosure requirement. And the second, the law created by central bank is greening central bank's assets. So central banks have a lot of financial assets, for example, foreign reserves and employees' pension funds. So especially many central banks in Europe, they try to introduce, they started to introduce the green criteria to their foreign reserve and pension funds. The third and the most interesting function played by central bank is the third point. That is greening monetary policy. So there is two ways to do green monetary policy. So one is that some central banks did quantitative easing, such as US and Europe and Japan. And so especially Europe, they try to purchase the green-oriented corporate bond and also green bond. Another way to do is like what PBOC, China's central bank, and Bank of Japan are doing. Conditional on commercial banks lending, green lending to their private sectors, the central bank can provide cheap loans to commercial banks, sort of credit policy. So there is two ways to do it. And then finally, central bank can do its own emission target. For example, central bank needs money, so and other operations. So central bank can set their emission target and then try to reduce the emission from their own operations. Now I'd like to give you three examples. One is the Bank of England, as one of the leading central banks in the world. And what Bank of England is doing is they already started to work on the stress test on banking sector and the insurance sector with regards to climate change. So they are doing it, and they are going to disclose information to see. And also, one of the very innovative and aggressive elements of what Bank of England is doing is that they started to disclose the carbon emission intensity from their holding of government bonds and corporate bonds. They also calculated implied temperature from this asset holding, and especially with regard to corporate bond holding, they admitted in 2020 their holding is equivalent to 3.5 degree global temperature by the end of the century, which is way above Paris Agreement. So they are gradually reducing this sort of emission brown bond. So now the degree is 3, but still they have to lower. This is very, I think only one central bank in the world is doing it. And also Bank of England is the first central bank which just started to purchase green portfolio from last November. ECB is right now discussing that. I think next speaker will talk about it, I think. And also Bank of England is the first central bank which started to impose emission targets on their fiscal operations such as green. So I think Bank of England is really taking some lead globally. And then I just want to mention about Bank of China, as already many speakers talked about. China introduced its own sort of taxonomy, green bond endorsed project, and then excluding fossil fuel project. And this China's version is sort of white list. Whereas the EU's taxonomy is based on threshold screening criteria. So there are two different approaches, but they are discussing about how they can reconcile those differences. So that is good thing. And also central bank is evaluating commercial banks based on green loan performance and green bond holdings. And so it's quite, China's central bank is quite active in this area. And as other people mentioned, the central bank started to accept green loans and green bonds as a collateral for central bank lending to commercial banks. And also from November last year, central bank started to provide cheap loans to the commercial bank, conditional on commercial bank lending to the private projects. Finally, I just want to mention about Bank of Japan. The Bank of Japan also is going to conduct climate stress test with Financial Services Agency this year. And also they are promoting commercial banks to disclose climate information in line with TCFD guidelines. And also last year, the Bank of Japan also decided to purchase some green sovereign bonds out of their foreign asset reserve. And also from December last year, the Bank of Japan also started to provide the low-cost financing to the commercial banks, conditional on their green and transition loan and investment. However, unlike the Bank of England or EU, the Bank of Japan hasn't shown any intention to bring their holding of stocks and bonds. Okay, so finally, I just want to show in Asia, the China's green bond issuance is dominating. So the China's outstanding green bond issue is six times as large as Japan. And so I think China is also becoming a quite attractive financial center in terms of green finance. Thank you very much.
What Japan does in green finance.
We also compared the practice between Japan and China. Even though China invests more in the green bonds in China, but we know that in the financing in green industry, Japan started earlier than China and noticed the important role of green technology. So Japan actually started earlier than China. Well, the Chinese government is more effective in implementing the foreign finance, and under the guidance of the central government, the commercial banks and the central bank carried out a lot of measures. The government plays an important role in guiding the financial activities. That's why we invest more in the foreign credit, and we hope the two countries will have more exchanges to talk about our experience, especially for the development of green technology on energy. And Japan is quite advanced on that. And next one, we will have the chairman of Sustainable Finance, Gobel Hirura.
Yes, good afternoon. Can you just please confirm whether you can hear me?
可以听见。
Thank you very much. So I have a presentation. Let me just share my screen. Okay, thank you very much for the invitation, and that I can also join this great session. Really a privilege to be part of this forum with so many interesting presentations. As it was said in the introduction, my name is Gábor Gyula. I'm head of the Sustainable Finance Department of the Hungarian Central Bank. And I would like to talk briefly about the European Union's Sustainable Finance Framework, and also a little bit focus on the experience of Hungary. Hungary is obviously a small, open emerging market, emerging economy. We have very strong economic ties to China, and actually the importance of China is growing for the Hungarian economy as well. And actually in the last 3 or 4 years, a lot has happened in the sustainable finance segment in Hungary. So hopefully our experience will be interesting for all participants, even if the Hungarian market is much smaller than the Chinese or the Japanese one. So let me first start with a little bit speaking about the European framework. Some elements have been mentioned previously, but hopefully still useful if we just wrap up the fundamentals of the European Union framework. In the EU, a new Sustainable Finance Action Plan was developed in 2018 by the European Commission, and it has basically 3 main objectives as part of one comprehensive strategy. The first main objective is to reorient capital flows towards sustainable investment. I think we all know that the sustainable development goals, such as climate change mitigation, come with huge investment needs. Also in Europe, we need to step up and increase green investment, and of course this is also true outside Europe, basically I think in every region of the world. In the EU, one explicit goal of the new framework is basically to help financial markets to channel more funds towards sustainability. But this is, of course, this needs to be done in a very prudent and manner, respecting financial stability. So that's why the second objective of the EU plan already mentioned ESG, the importance of ESG factors in investing decisions, in lending decisions. ESG is, of course, a great way to enrich risk management. And basically, if sustainability is part of risk management and part of the angle that investors or creditors take, then risk management can also be, if, for instance, polluting companies don't have a transition strategy in light of the climate change mitigation efforts of the global community. So if these companies are perceived as having a higher risk for financiers, then basically risk management can also help the investment. And thirdly, the third objective of the EU framework is to foster transparency and long-termism. There is empirical evidence that many large companies, especially those listed on stock exchanges, pursue a quite short-term strategy.
Can you turn down the page of your PPT, please? You're still on the first page.
Really? Okay, sorry. Let me just. Is it now moving?
No, it didn't move. Please.
Okay, then. Okay, just a second. Yeah. I'm still on the second slide, no problem. But let me then use another screen sharing mode.
Yes.
Just a second. Can you now see my full screen?
Yes.
Okay. And now I'm scrolling in the presentation. Hopefully it's now working. Okay. Is it okay now?
Yes, it's okay now.
Thank you, great. So I mean, as I said, the third goal of the EU plan is to foster long-termism and transparency. We need to get more information about the sustainability of large companies, especially how they are managing their own environmental, social, and governance risks, ESG risks. And if they are, of course, transparent, then investors can take more informed decisions. And of course, for all of this, the EU taxonomy is a very important ingredient, just as it was also mentioned in previous presentations. So without repeating what has already been told, the EU taxonomy is, of course, similar to other jurisdictions' taxonomy. But I think it's worth mentioning the very important philosophy here is that basically an economic activity is considered sustainable in the EU framework if that economic activity has a substantial contribution to one of the environmental goals enshrined in the EU taxonomy regulation. And these 6 goals are climate change mitigation, climate change adaptation, sustainable water use, circular economy, and pollution prevention of the ecosystem. And at the same time, the economic activity, in order to qualify for being sustainable, should not do significant harm to any of these objectives. And I think this dual structure is extremely important, extremely useful. And now the so-called technical screening criteria are being published. These are very detailed technical rules which basically provide the quantitative and qualitative detailed criteria for all kinds of economic activities. And now banks and asset managers, investors are making their first steps to apply the EU taxonomy, and I will tell you how it is happening, for instance, in Hungary. And thirdly, of course, it's also useful to mention that the EU taxonomy is just one very important pillar of the EU framework, but it's not the only pillar. So the EU taxonomy is providing us basically a dictionary of when an economic activity can be classified as sustainable. But we also have another very important regulatory piece, the so-called SFDR, the Sustainable Finance Disclosure Regulation, which obliges asset managers, insurance companies, pension funds to make financial products more transparent from a sustainability perspective. And especially for green investment products, ESG mutual funds, there are very detailed rules so that investors have a very clear picture about how that financial product market is as green or ESG is contributing to sustainability, if any. So that's the SFDR, and let me also mention the other important pillar is basically corporate reporting. Of course, asset managers can only really make it transparent to their investors how green a financial product is if the underlying companies are also transparent from a sustainability perspective. So that's why in the EU now a lot of effort is put into corporate reporting. So the new corporate sustainability reporting directive is under discussion now at the EU, and this will basically require all large companies to publish a very detailed set of ESG data, including alignment with the EU taxonomy. So basically all large companies will have to report the share of its balance sheet or capex and opex, how much of that is aligned with the EU taxonomy, and all these elements, in addition to others which I don't mention now, just to be conscious of time, will add up to a comprehensive EU sustainable finance framework. And let me mention in my second part of my presentation how we are putting this all into practice in Hungary, which is, like I said, a small open economy in the eastern part of Europe. Probably it's true for other Central Eastern European countries that our financial markets are less developed than, for instance, many Asian markets and also Western European markets or US markets. And it's also true in integration of sustainability. So in 2019, when the Central Bank of Hungary launched its so-called green program based on the EU Sustainable Finance Action Plan, we perceived that the financial system has a high exposure to environmental risks, but there is a low preparedness at banks to address these risks. So there is very little awareness that, for instance, climate change can have an impact on the banking market or on the performance of investment funds. There was very little green financial product supply, so no green bonds, almost no green loans, and that's when the central bank launched its program. And the objective was basically to make progress in all fields so that the financial system is resilient to environmental and climate risks. They have the capacity to assess and manage climate and environmental risks, and especially that banks, asset managers, insurance companies have more green financial products, more green loans, green bonds, green investments, so that the financial system can act as the engine of the transition to a green economy. So our green program consists of 3 pillars. The first pillar is our steps in the financial system to basically green the Hungarian banking and capital market. The second pillar is our social and international relationships. So we joined the network for greening the financial system, the NGFS, where for instance, China and Japan are also very important members, and we also, of course, in addition to NGFS, play a role in the EU working groups about sustainable finance. And we have built, I think, fairly strong cooperation with academia. We have launched with many universities green finance programs, so that now new students enrolled to, for instance, Master of Finance programs now get green finance courses, so that basically there is a supply of experts to banks and asset managers as students graduate from universities. And of course, international cooperations, such as the conference today, what we have today, are very important for us, and we are very keen to learn from other countries, in particular Asian countries who are in many respects more developed in green finance than we are in Hungary. And thirdly, the third part of the third pillar of the program is decrease or the central bank's own ecological footprint, and we try to act as a role model in terms of environmental disclosures as well. So let me then mention just some quick snapshots. We've just published our climate stress test for the Hungarian banking market, and it says that until 2050, climate change is certainly an important issue for financial stability. And if the global climate change mitigation efforts are unsuccessful, then that's basically a bad news for financial stability. And basically, there is a considerable rise. There will be a considerable rise in NPL ratios, so non-performing loan ratios, if produce the so-called green recommendation for banks, basically for all Hungarian banks to set up a responsible department for managing climate risks. It's also an element of the green recommendation so that banks design green financial products, start green lending, and it's also recommended by us that Hungarian banks sign the UN's Principles for Responsible Banking. When we issued the green recommendation, at that time no Hungarian banks were signatories, but now the biggest Hungarian bank has just signed the principles, and now more banks are planning to join this very important UN initiative. But the Hungarian banks are still a little bit lagging behind. On this chart, you can see that in terms of strategy, governance, risk management, disclosures, Hungarian banks are still not meeting the expectations in our green recommendations. And I can tell you that our green recommendations is very similar to the European Central Bank's green recommendation. So there is still a long way to go for Hungarian banks until we can say that they have incorporated environmental sustainability sufficiently into their own business. Today, there in other presentations, we've mentioned already the role of incentives and central bank programs. In Hungary, the Central Bank of Hungary had introduced so-called green support factor for green lending. So, in the capital requirement, banks can enjoy a preferential treatment for green loans. This is what we started last January. And in the first phase, banks would enjoy this green support factor for investment in green bonds and loans for renewable energy production. And since banks were really reacting positively and stepped up their green lending and green financing, now sustainable agriculture and electromobility and all and different other activities based on the EU taxonomy is very important. So this is where we apply the EU taxonomy. Banks can enjoy green discounts in the capital requirement framework. And these sums may not be very high from a Chinese perspective, but in Hungary, more than 200 billion forints of green financing thanks to this capital requirement scheme. We think this is a good sign that markets are moving in the right direction. This is what I mentioned about banks. Let me just very briefly talk about investment funds. In Europe, there is a very huge and very dynamic inflow into ESG driven mutual funds. So basically, in every year, more funds were channeled in ESG mutual funds than the traditional mutual funds in Europe, in more developed the Western markets. But in Hungary, still the share of the mutual fund segment in the stock of assets under management still a little bit below the 1%. Now it was 0.5% in 2020. Now it's like 1% 2021. It's growing, but still the ESG mutual fund market is still very small in Hungary, and the same applies to almost all Eastern European countries. So there is a lot